The stock market is screaming towards new highs, and the headlines are celebrating. But it's a lie. It's a carefully crafted illusion designed to keep you calm, while behind the curtain, the biggest financial shift in a century is already underway. While everyone is watching the numbers on the screen go up, a single hidden signal is revealing a terrifying truth, a warning that the world's most powerful people are quietly preparing for the system as we know it to come undone. You've seen this chart everywhere. The S&P 500, a relentless climb upwards, a testament to American economic power. It looks unstoppable, a one-way ticket to wealth for anyone who buys in. This is the story they want you to see. But what if I told you that this chart is measured in something that is constantly losing its value? What if we measured the market not in dollars, but in something real? Now look at this second chart. This is the S&P 500 priced in ounces of gold. Instead of a powerful bull market, it shows a brutal, decade-long stagnation. In fact, it's hovering near its lowest levels in over 10 years. These two charts tell two completely different stories. One is an illusion of prosperity. The other reveals a harsh reality. Your stocks are only making you richer in a currency that is being systematically devalued. Against a real, timeless store of value like gold, the market is losing ground. This divergence isn't just an interesting data point. It's a chasm opening up between paper wealth and real wealth. And what happened next would expose who was on which side of that divide. The reason for this growing gap isn't a secret, if you know where to look. Gold isn't just rising because a few investors are getting nervous. This is a coordinated global move. While the mainstream media distracts you with daily market noise, central banks around the world are executing a plan in the shadows. For the last 2 years, they've been on the largest gold buying spree in modern history. And who is leading the charge? China, Russia, India, and Turkey, the very nations openly challenging America's global dominance. They are systematically, almost frantically, dumping their US dollar reserves and converting them into physical gold. This isn't just a financial strategy, it's a declaration of war. Every ounce of gold they hoard in their vaults is a vote of no confidence in the US dollar and the entire financial system it supports. They are building a lifeboat before the ship goes down. But that begs the question, if the foundation is so weak, what's keeping the American stock market from collapsing right now? The answer is even more unsettling. The market isn't standing on a solid foundation. It's being propped up by 3 dangerously fragile pillars, and each one is beginning to crack. The first pillar is the government's infinite money glitch. The US government is running a deficit of nearly $2 trillion a year. That's money it doesn't have, borrowed into existence and injected directly into the economy. It's like a patient on life support being given a constant shot of adrenaline. It keeps the heart beating, but it doesn't heal the underlying disease. It creates a synthetic, artificial, economic boom that looks real on the surface but has no substance. The second pillar is the Federal Reserve's trap. The Fed is completely cornered. If they raise interest rates high enough to truly fight the inflation that is crippling families, the interest payments on the nation's $34 trillion debt would become so massive it would bankrupt the country. It would also crash the housing and stock markets overnight, so they can't. They are forced to keep financial conditions relatively loose, sacrificing the value of your savings to prevent a total system collapse. And the third pillar is the corporate profit mirage. Yes, corporate profits are at all-time highs. But where are they coming from? They're not coming from innovation or increased productivity. They're coming from raising prices on you, the consumer, and by using borrowed money to buy back their own stock, which artificially inflates their share price. It's financial engineering, not economic strength. These 3 pillars have created a bubble of unprecedented scale. But this artificial support system is about to face a threat from the outside. A geopolitical earthquake that could bring the whole thing crashing down. That earthquake was hinted at when Donald Trump threatened a 100% tariff on China. The market shuddered for a day, then pretended everything was fine. But investors missed the point. The threat itself wasn't the real story. It was a symptom of a much deeper disease, the end of globalization. For decades, the world was built on the idea of the US and China working together. That era is over. China is no longer dependent on America. It has spent the last decade building its own alliances, like the Belt and Road Initiative, creating a parallel economic universe where it makes the rules. China's exports to the rest of the world have exploded, completely offsetting their losses from the US trade war. They've successfully insulated themselves. This growing independence has emboldened the BRICS alliance: Brazil, Russia, India, China, and South Africa, now expanded to include major oil producers. This is no longer just an economic club. It's a strategic coalition of nations openly designing a world that doesn't revolve around the United States. And their ultimate weapon isn't tanks or missiles. It's something far more powerful, and it's aimed directly at the heart of American power. That weapon is de-dollarization. For over 70 years, the world has run on the US dollar. Every country needed dollars to buy oil, to trade, to function. This gave America an incredible power, the ability to print the world's money and to cut off any country from the global financial system. That power is now being systematically dismantled in a silent, coordinated war. It's no longer a fringe theory. It's happening right in front of us. Saudi Arabia, a key US ally for decades, is now openly in talks to sell its oil to China in Chinese yuan. Two of the world's largest nuclear powers, Russia and India, are settling billions of dollars in trade using their own currencies. The BRICS nations are in the advanced stages of creating a new reserve currency, one potentially backed by a basket of commodities, including gold. Each of these deals on its own seems small, but together they represent thousands of cuts designed to bleed the dollar-based system dry. They are building an alternative financial system, brick by brick, and with each new brick, the foundation of America's economic dominance erodes. And while this financial war rages on in the background, the consequences are already being felt on Main Street, creating a dangerous divide that is reaching a breaking point. This is the everything bubble. The trillions of dollars pumped into the system by the government and the Fed had to go somewhere. It flowed into financial assets, pushing the stock market to record highs, inflating real estate to unaffordable levels, and fueling speculative manias in things like crypto and meme stocks. For the top 10% who own the vast majority of these assets, it's been the greatest party in history. Their net worth has exploded, but for the other 90%, it's been a nightmare. They are the ones left to deal with the consequence, crippling inflation. You feel it every time you go to the grocery store, every time you fill up your gas tank, every time you pay rent. The official inflation numbers don't even begin to capture the struggle of trying to survive in an economy where the cost of living is rising far faster than your paycheck. It has led to the lowest consumer sentiment in decades. We are living in a tale of two economies, a booming, artificial economy for the rich and a brutal, inflationary reality for everyone else. This growing divide, this anger and frustration, is the final, most crucial warning sign that the system is becoming unstable and is ready to fracture. We are standing at a historic crossroads. The three pillars propping up the market, government spending, central bank intervention, and inflated profits, are unsustainable. The geopolitical landscape is fracturing, and the dollar, the very bedrock of the global economy, is under a coordinated attack. The divergence between the S&P 500 priced in dollars and the S&P 500 priced in gold is the ultimate summary of this entire story. It is a real-time measure of the loss of faith in a system built on debt and promises. It is a signal that smart money, from central bankers to the world's wealthiest families, is quietly exiting the world of paper and entering the world of real, tangible assets. When one of these pillars finally breaks, or the de-dollarization movement reaches a tipping point, the collapse won't be a gentle correction. It will be a violent reset. The illusion of wealth will evaporate overnight, and all that will be left is what has real, enduring value. The world is splitting in two. We are witnessing a great divergence between the paper wealth of the stock market and the real value of hard assets, between a system built on trust and a future where that trust has been broken. The headlines will keep telling you that everything is fine, that the market is strong. But the charts, when you look at the right ones, tell a much different story. They tell of a system under immense stress, of a global power shift unfolding in real time. The next decade will not be like the last. It will be defined by this conflict between the old world of paper promises and the new world emerging around real value. And the most important question is, which side of that divergence will you be on?